Good morning, everyone. With the recent election of Shigeru Ishiba as the new leader of Japan's ruling Liberal Democratic Party (LDP), Japan's financial markets reacted strongly. Stock prices plummeted, the yen strengthened, and interest rates rose. Investors had expected Sanae Takaichi, a proponent of fiscal stimulus and monetary easing, to win. As a result, there is both anxiety and anticipation about how Ishiba's leadership might shape Japan's economic policies in the near future. On September 27th, financial markets in Japan responded to the election of Shigeru Ishiba as the new president of the LDP with a significant market sell-off. The victory of Ishiba, known for his focus on balanced budgets, surprised investors who had been expecting Sanae Takaichi's win. Takaichi had promised more aggressive fiscal stimulus and monetary easing, which led to a strong market reaction when Ishiba was declared the winner. This shift was quickly felt in the markets, with the yen appreciating sharply and the Nikkei stock index futures dropping by over 2,000 points. Investors had already factored in a possible win for Takaichi, whose policies were seen as more supportive of market growth, leading to disappointment when she lost. Analysts believe this market reaction could be temporary. Tom Suehiro, chief economist at Daiwa Securities, pointed out that investors may take a more positive views on Ishiba's policy over time, especially if his new government gains public support and stability. The focus now shifts to how soon Japan might dissolve parliament and hold general elections. Historically, elections in Japan have led to stock market gains, with average increases of 5.2% for the Nikkei index since 2000 during election periods. There are concerns, however, about whether Ishiba will push for fiscal austerity, especially since Japan is just beginning to emerge from deflation. Some investors are worried that his policies could slow down Japan's fragile economic recovery. On the other hand, Richard Kay, a portfolio manager at French asset management firm Comgest, suggested that investors might turn to other markets, such as China, for more aggressive stimulus. In terms of monetary policy, Ishiba is not expected to push for major changes, with most experts believing he will leave decisions to the Bank of Japan. However, market participants are keeping a close eye on any hints of further fiscal tightening or economic shifts that could affect Japan's recovery. As Ishiba forms his new cabinet, there is hope for stable governance and policies that can maintain economic growth. Though he may not offer the bold reform investors hope for, his steady leadership may bring a sense of security to Japan's political landscape during these uncertain times. While the financial markets reacted negatively to Shigeru Ishiba's election, the long-term outlook remains uncertain. Investors will be watching closely to see how his policies unfold, and whether his government can maintain economic stability and gain public support. For now, both anticipation and caution are at play, as Japan navigates a critical period of political and economic change. Thank you for listening.